Well, good afternoon, folks. It's Shooter Scott Henderson. Welcome to the week ahead video. Just jumping into a few things this week. First off, if you have SQQ and it is not a larger hedge for a market event, such as a limit down event, this week might be a good week to trim off your longs, just close them out. Reason is we had a nice wick off on the prior high. Everything's telling me to some degree we're going to head lower from here, inside bar, indicating that we have a change. So I would suspect that we ran off of this. Didn't get really quite too much out of that last push. I'm only looking at the 4 hour here, but let me look at the daily. Now, once we get this little flat, this bleed off, so February 4th is when we should start head our next leg to the downside, get a little bearish in the markets. So that's the way that, when I use specific ETFs to give me a visual, you have to really go look at the options as well. But my main thought here is we went up, didn't take out the prior high, and then we wicked off, had some decent seller exhaustion. Not superb, not excellent, not out of this world, just some decent. Look at the prior wick offs, when we get that kind of wick off, of course, in this scenario, we didn't get that. We got a dark green candle. So, we could continue. That's just my 2 cents. All right, let me jump into, let's look at Walmart. Walmart, we sold some cash secured puts on. And honestly, the look at this, the idea is we're going to stay in this flat until late February, and then I'm going to decide whether we're going to hold it. If we don't, I think we will have the growth numbers, and I should know the earnings date, but we're going to have earnings by then, and I think they totally beat. So, I think there's a chance that we push back up and take out these highs at 96, and then we'll decide whether we're going to hold from that point. Also sold some Micron, same thing in this flat. What I was looking for was just some positions that I didn't think were going to go anywhere. We've wanned a little bit. I sold below where I thought the gap was. I didn't think we'd get back into the gap, but we could. Right now it's not as euphoric as I would like. And then we also sold some cash secured puts on DT midstream. And I just like the look here. Looks to me like we're going to get, here, nice flag, pushed above the flag. I think we can continue and take out these highs, regardless of what this says. Count supports to the upside, maybe to the 116 level. That was my thought. I actually like that better than the other three. I don't usually like to sell oil and gas cash secured puts, but it seemed like there again, a safe place to make some income while this market sort of is meandering. All right, let's go to QQQ, because that is where my interest really lies this week. Now, on the daily, we're in a crossroads. We could flush lower, have some decent spot. I've not adjusted my buy zone. This is today. The problem with living with a live strategy is it changes. So it has a different opinion based on what's there. So for continuation, we could flush down to 467. However, at this point, it's suggesting, when I go down to the 30-minute, it's suggesting that we bounced this week, which was why we tested those TQQ longs and the QQQ long. And we got a little bit out of it. We got this push, and then we closed it up here. It whipped off on us. Really. So at this point, we're looking for a reason to get long. I want some kind of candle or something that's going to give me an inclination that we are getting bullish, maybe a little more volume, another volume candle behind that. Then we look for our next leg, maybe around the 514 is the thought. So that's what I think will happen. Let's just take a look at the 30-minute on the SPY as well. I'm thinking maybe we get this XABC pattern. So I'm looking at, potentially a push bullish. However, when I come back out and I look at the daily, that is going to wane pretty quick. Once I don't think we take out these highs. We could. We could. But I think we put in a higher low, maybe around 605.50, and then we start another leg down. And then, that to me makes a lot of sense with this look. Left shoulder, head, right shoulder, maybe is what we're putting in. That's my thought. All right, let's take a look at XLF. If I can find it. All right. Now, we broke below this. I almost took this short. Really this week we have weak earnings with any of them. Anyone this week. Our next target obviously is gap fill, because you almost always get a bounce gap fill, but I'm just going to tag it down here and say that's our T2 target. What I mean by T2 is it's our second target. Just those of you who don't know, I just went to that because it was just an easy way to put something on the chart that worked for me and didn't require a horrendous amount of work in getting it there to you. And then T3 is going to be down there, maybe around 44 bucks. So even still, I don't think it's going to be that deep, but if earnings are rough, we could. One thing here is that we have sort of a confirming low on RSI, and we got a divergent low. So at any point, this could bounce based on the look. So if we have a robust earnings, the symbol that I like the most into this week is BlackRock, because we have the most euphoric looking bounce. We're going down to 30 minutes visual. And I'm just doing these tight range because that's really what when we're trading earnings, or I'm trading earnings. I'm really not up trading the daily. Obviously, it's going to give me some kind of reason why I'm going to look at it in a shorter time frame. But what I'm looking at is how euphoric this is, where we have our bottoming patterns, the Elliott wave histogram here indicating divergence, divergence, divergence. Okay, nice clean bottom. We got a nice push up, very much just exactly what happened in the NASDAQ. I mean, this was one that I was watching as well. Decided to do those QQQs and those TQQs. That's tongue twister. Say that 10 times. So, I'm looking for maybe $30 to the upside, back up to this ledge, or we're only going to get like 970, or we could get 50% back of this leg. So measuring this last hoorah, right, this whole leg, 50% back gives us maybe 975, which where's that happen to be? Right here. So that's my thought. Next one that I really like this week is Taiwan Semiconductor. Now, clearly a crossroads, but again, the risk reward to the upside, if we're going to hold, pretty solid off of maybe a 10 or 207 number. It's a good spot to take some risk, because at that point, that should give us enough of a launching pad, maybe where we get this out if we get that bullish look to equities that I see going into the week. So now one other thing, let me jump over and look at Bitcoin as long as I'm here. Now I'm just looking at a 4-hour chart here. We have this broadening formation, low, lower low, low, higher high. So we're not euphoric if we close around 103 and then we flush again. So we're going to get into this like band, flipping out to the daily. I really don't like this look because it's clearly defining a right shoulder. If we can't get above this 105, 732 and stay above there, we really need a catalyst. I don't like the way this is looking. I don't like the way it's playing out. We get a little bit of a push, but we can't get above, got a little above our left shoulder, but we couldn't get back above this 106, 750. Now we're saying we're going to get a little higher high, maybe around 106, 342. Now we get that, and we don't, if you have not been buying IBIT puts as insulation, clearly with this look to the downside, I would be doing, 3 to 5% of your holdings, 3 to 5% of your gains, however you want to factor that into your look. But I do think there's a good possibility that we turn lower on this. And that's just because of how long we've stayed. Now, historically, that has not been the case. Come in and give you a visual of what I see. I see this as a descending wedge. Then maybe we bust out to the upside. All right, so assuming this is our bearish leg, right, which we basically are putting this in here, could be that tight. It's going to be that tight. It'll be something like this. And then we come in and we put in a new impulse leg, which would look something like this. Is my thinking. I'm just going to, just so I have room on my chart, something to that degree, which is consistent with the look at 117, 767. However, that is January 25, folks. That is going to be way out there in time. So structurally, this is challenging because I don't think too many of you bought here around 100. I don't think many of you did at all. But I think there's quite a few of you down here around 85, maybe even 80,000. Hopefully you were one of the fortunate ones and bought with us down here around 35. But looking at this, I think the IBIT, now realize June will pop up at some point. It's just not it's not available yet because they're not selling. All right. So you got May and I think it was September as far as the months. So hopefully by the time we get our high here at roughly that 106, 347 right here, we've got June $25 puts in IBIT. I want you to go deep because this is insurance. The whole thing is to offset the downside, not necessarily to make it profitable. It's not a swing trade. The idea is to stay a little wholer than you would have otherwise if you held the position trade through to the end, kind of thing. So you're swing trading around the edges a little bit to take some of that heat off your account. So that's my 2 cents. That's what I have for this week, folks. Great trading. Until next time.